if you're kind of keep wondering, like, why does the market just keep going up despite all this other concern? That's why. Everybody's flowing money into the markets right now and pushing asset prices higher. So no matter what your other theses are, flows trump thesis every single time, and that's what's happening here. Here's what you need to know before the bell. Yesterday, we talked about this short-term kind of cup and handle formation that it's technically very bullish. We just broke out of it, so we've confirmed the cup and handle. And we talked about yesterday is that typically leads to higher prices. And again, this is why analysts right now are targeting 6,000 on the S&P by the end of the year. So again, everybody's very bullish right now. This year in particular is the second largest year of equity inflows since 2014. So it's been a very big year. Foreign inflows into U.S. stocks has been just ginormous. And but inflows overall are very, very high. So if you're kind of keep wondering, like, why does the market just keep going up despite all this other concern? That's why. Everybody's flowing money into the markets right now and pushing asset prices higher. So no matter what your other theses are, flows trump thesis every single time, and that's what's happening here. But here, let's talk about something interesting. So we talked about this cup and handle formation yesterday. Last night, I was doing a little bit of longer term analysis on markets, and I had remembered that we had talked about the cup and handle before, so I went back and kind of looked through some of our previous writings, and indeed, I talked about this cup and handle formation before. It was back in October of 2023 when we talked about, hey, we're about to have a fairly significant rally in the markets. We talked about increasing our allocations to equities. But that was on a weekly basis. We had this very nice cup and handle formation on a weekly basis. So we went through that bear market or correction rather in 2022, came out of it in late 2022, retested, had that 10% decline in the summer of 23, which formed the handle of that cupping pattern. And that is really kind of technically has been the driver for this elevation in the markets here over the course of the last year and a half. Now, here's what's interesting about this. As we're talking about this, we have a really interesting negative divergence that's now popping up. So we've got this really nice bullish uptrend to the markets right now, but we have both a negative divergence in both relative strength and momentum. These negative divergences are good indicators that we may be getting closer to the end of this move. And again, 6,000 certainly the proper target right now for this particular move, but we may be getting closer to the end of this move than not. Pay attention to that negative divergence, because again, if that doesn't correct itself, that typically precedes downturns in markets. In fact, the last time that we had a negative divergence was going right into the peak of the markets in 2020, late 2021, early 2022, when Russia invaded Ukraine. We had that same negative divergence setup, and then of course we went through that corrective cycle in 2022. So again, we may be getting closer. This was something that won't kind of, again, weekly charts, monthly charts, those take a long, we talked about earlier this week, monthly charts on gold and stocks are extremely overbought, but those take a long time to play out. But again, kind of keep a watch on this negative divergence, because it does suggest potentially that probably next year we're going to get into a cycle where markets are going to have to reset a bit, unless the markets can resolve that issue without correcting. So normally it doesn't happen, but we'll see what happens. But pay attention, those negative divergences on relative strength and momentum does suggest that this kind of rapid inflow of capital may be starting to slow down a bit. So again, flows trump everything else, and we'll keep a watch on that. So, all right, that's what you need to know before the bell this morning.